All right, what's up, everyone? We're live. I'm sitting down today once again with Mandy to discuss some psychology topics today. Mandy is the person that comes to be the expert of psychology when it deals to trader mindset, these kinds of things. And she's been here before a few times, quite a few times. She's a person that I definitely look forward to for discussing how to improve your mindset, how to get better psychology. And today we'll discuss how to find out your training style, how to work it with your personality, and in the end, try like a pro. So, Mandy, how's it going today in Australia?
Really well, but it's cold. Winter has arrived, so I got a
Interesting.
little kangaroo for you guys in the back of.
I can see that. Awesome. So
I actually bought
let's
that for my
begin.
friend's
And
baby.
go ahead.
So I said I actually bought that for my friend's baby, but I haven't sent it out as yet. So
Okay.
why he's on the podcast with us.
Awesome. Cool. So if you guys have any question, you can always type them in the chat. We'll be able to answer your questions today throughout this live stream. Questions about psychology, about the mindset, about how to find out your training style. But maybe let's begin with this. When I ask you about training style, what comes to your mind? Like, what's the best way to, or let's begin with the opposite. So, what happens when you don't train according to your personality? What does that look like?
Yeah, Etienne, I see that all the time. What it looks like in a nutshell is red. Profit and loss only showing a downtrending equity curve and a red, basically loss, creating losses all the time and not knowing why. So I see a lot of traders, they work incredibly hard on their trading. They do, everything that's being told, what that they're being told to do. But the trading style doesn't suit them. And so they're struggling and fighting and they're wondering like, what's wrong with me? Because, I'm doing all the work and still not creating profits. And so I see that a lot. Let me just turn off my other monitor because I can see maybe that's better. No, still something blue. Sorry, I'm just trying to turn off my monitors so it doesn't reflect in my glasses. That's better.
Cool. Awesome.
So yeah, I see that a lot, and then my heart breaks for them because they're so disappointed and they're so stressed out, and they say, I've got trading psychology problems, and then we go through their strategy together, and it's like it's not trading psychology problems, dude. It's really doesn't suit you. Yeah.
Interesting. I see Naga's in the chat. Naga from Montreal, Canada. It's been a long time. I've met Naga in Montreal, so it's good to see you here.
Yeah, is
And
that Naga
as
who
well as, of
used
course,
to be on
Bruce.
the chat
Bruce
with
is
us?
always pissed off for not coming up live for the live stream, so it's good to see you here as well, Bruce. Thank you for coming. I appreciate it.
Yes.
Awesome.
Naga used to
So,
ask really good questions. Is that him?
yeah,
Or is that a
exactly. Yeah,
different Naga?
this one.
Yeah,
Yeah,
oh, excellent. Hmm.
awesome. So, how should people go about finding their trading style? Because what I see a lot is people go with trial and error. They try some things out in the market. They try to trade a 5-minute chart, doesn't work. They try to go on like a 30-minute chart, doesn't work. They kind of find it with trial and error. So, what are some of the ways to find out your trading style better?
Yeah. And again, I see that the same like you do. There's so much trial and error. There is no strategy or no, targeted effort to find out what really works for you, and because they don't know how, right? They don't know how to elicit what strategy would be working for them. What I also see, Etienne, is that there's a lot of people out there who sell trading styles or trading strategies, methodologies, and I see traders just buying into it without testing it and just believing that whatever strategy they're being taught is actually working. And so these are, the two really big mistakes that I see. Now, the strategy might be working, but again, if it is not suited for your style, then you're not going to succeed. So let me give you an example. If you're someone who needs a moment of time to make a decision, who's not a fast decision maker, if you trade on a 5-minute chart, so even though that might work for the educator who's teaching that strategy, it will not work for you because you will always have the feeling that you're too slow to press the mouse button, and then you get frustrated with yourself. You're like, what's wrong with me? The trade was setting up, it was so great, and then I didn't press the button and I missed out on a huge profit. Well, it might not be that you missed out on a profit. It might be that you need a strategy where you need a little bit more time to think through and to make up your mind before you press that mouse button. So as you know, I've spoken about the disc profile extensively. And so that's where I would start. If I were to start new as a trader, and that's what I do with my guys as well. And I know you do something similar, Etienne, with
Yeah,
your
me too.
traders.
Since you taught me a
Yeah.
few years back, it made a big difference on how I
Ah,
can kind of understand people and tell them what to trade better. Yeah,
yeah, yeah. And it really started with understanding yourself, wasn't it?
of course. Yeah.
Yeah. So I would start with this profile. If you're a high D, then you are able to make, or you're more able, you're possibly more able, because there's other influencing factors, to make really hard and fast decisions because you're facts and figures focused. If you're a high I, you would be making decisions based on intuition and feelings, so also suitable for making quick decisions. The high S's and the high C's, maybe not so much, right? So the high S wants more time, and the high C wants like a really structured, let's say 3 or 4 steps before they make a decision, which also can be trained to make a fast decision based on that step-by-step approach. So that's very generalized, as you know, but that's where I would start, looking at what is your natural way of making decisions at this stage. And observe yourself, right? Observe yourself and say, how do I make a decision? Let's say if I want to buy a car, so a high ticket item, compared to if I want to buy, I don't know, if I have to make a decision about what to eat today, something that is not of big consequence. If you take a long time to make small decisions, then you might not be suitable for fast decision making, aka scalping or day trading. Now, that doesn't mean that you're doomed, you will never be able to be good at it. It just means that you're not naturally trained in it, and then you need to go and train fast decision making. You can do that all day, right? So, for example, let's say you go for dinner to a restaurant and you're the one who always wants to order last. Now, that tells me that you don't have a good decision making strategy. You just don't know what thoughts to filter through or what steps to go through to choose a meal that you would like to choose. Now, so, for example, one of my filters is I always eat in a restaurant that I don't cook myself at home because it's too complicated, or because I don't have the ingredients or don't have the skill set. So that helps me already to eliminate ordering spaghetti bolognese, because I know how to cook that really well. Um, so that is really important, right? That you know what you do naturally at the moment. And then if you want to trade a fast or a slower trading style, train yourself to become that kind of decision maker. Now, I also see a lot. So that's like the step one was looking how you do things naturally at the moment, and then either find a strategy that works for your natural style or adjust your style to the strategy. Another way would be when we look at um, continuation patterns versus reversal patterns. If you're someone who is what we call a mismatcher in neurolinguistic programming, so for example, if I say, hey, the sky is blue, and you feel the urge to say the opposite, like, yeah, it's blue, but there's a few clouds in the sky, then you are what we call a mismatcher, where you always look for the opposite. There's a really simple test that we make. So take 3 coins, have 2 on heads and 1 on tail, for example. And then you ask yourself, what do you see? And if you immediately see what's the same, then you're most probably what we call a matcher. And if you look immediately for what the difference is, you're most probably a mismatcher. There's no right or wrong, good or bad. Mismatchers are the ones who usually are trading really well on reversal patterns, and the matchers are really trading really well naturally on continuation patterns. So that can be a filter as well. Is your strategy a reversal pattern strategy, like double tops, double bottoms? Maybe in Wyckoff, the 3 pushes up and then before it comes down, or the 3 pushes down before it goes up for a retracement. Or are you naturally a continuation pattern trader? Now, as you know, at the moment, in the last few years, the market, well, I'm talking about indices, not so much about Forex in this moment. The index market has been just pushing up to the upside, 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 upside. So reversal pattern strategies have been failing. And as we know, if your reversal pattern strategy fails, that's a strategy in itself, because let's say you have a double top setting up, it fails, then that in itself is a bullish setup. Right? So you can look at, when you're a mismatcher, still look at your double tops, double bottoms, for example, but then use the failure of it as an entry to do the opposite. So that is how you can still perform really well if you always want to do the opposite of what everyone else does. So
That's really
that's
good
the second
advice.
strategy.
We covered a lot here. Yeah, those are really good exercises to try and see. Now, I just want to mention, because I'm sure we'll get some questions about it. The disc profile is DISC, and you can find it online on any website. You can do it there. They have free tests, of
Yeah.
course. I know the
Tony Robbins
scoring, the
is
precise
usually,
scoring, you need to pay for it, but it's totally worth it, in my opinion.
yeah, Tony Robbins is usually a good one.
Yeah, exactly. Awesome. So, and yeah, like you mentioned, the letters, the I and C, they stand for letter of the disc profile. So, just mention that out quickly.
Okay.
Awesome. So,
So another
we have
filter
a few
could
parts.
be,
So, we discussed so far the trending style, so like the time frame. We didn't discuss that much, but we discussed the straight trends or not. What about discretion and non-discretion? What about if you're systematic or more like discretionary trader?
yeah, really good question, because I find I have quite a few traders. Actually, really funny story. So I had this trader that I worked with a while ago from Florida, Melbourne, Florida, funny enough. And so he came to me and he said, "I'm not following my system. I'm terrible." And I looked at his stats, and he was making like $1,000 a week. So, really good. He's like in the top 25% of traders in the world, and he wasn't aware of it. And I said, all right, so let's have a look. And then when we went through his statistics, we found out that actually the discretionary trades that he was taking were the ones that created the biggest profits. And he didn't know that, because he's never had a look at his statistics. He was just trading, intuitively. So he's definitely high I energy. So I knew also he's a high I, because if he had enough high C, he would have kept his statistics. He would have had a step-by-step strategy written out. They love structure. They want things to be written out. They keep amazing spreadsheets of their performance. So that's how you, for example, can identify if you're a high C or not. So the first thing that I did with him, knowing that he's a high I, and I introduced the high C strategy of keeping your statistics, keeping a spreadsheet where you keep some notes about your performance, and then measure your facts and figures, your statistics. Now that gave us a lot of insights, because before he had the feeling he was, a failure, that he would never make it. And when we introduced statistics, he saw, oh my God, I make $1,000 a week. How come? How come I didn't realize? So what came out for him was that if he had been, so he tried to be a strategic trader and not discretionary, because he had heard that being a discretionary trader doesn't work. His statistics clearly showed that when he trades discretionary, he makes the best trades. So we can also see that for some traders, trading within a strategy really structured, that stifles them and they can't perform at their best. And again, you want to look at your statistics and compare, and then the statistics will tell you what you're naturally good at. So what we call it in neurolinguistic programming, there is in-time people and on-time people. In-time people are the ones who are always going with the flow. They run late because they don't keep track of time. They they do what they feel like doing in the moment. So they don't like to plan ahead too far. If that is you, then you are most probably someone who does really well with discretionary trading. But keep in mind that you also need to keep structure, like writing down your trading plan and keeping your statistics to support your discretionary trading. On its own, it will be a disaster. If you only make decisions based on intuition, it will be a disaster. And so the opposite is true as well, where if you know that you're someone who likes to be really structured and plans out his day and plans out the whole year, keeps spreadsheets, then you know you need to have a strategy that's written down, that's every step is clearly defined, that you can follow without thinking. So again, there is no right or wrong. It's really looking at how do you naturally do your best decisions? How do you perform naturally at your best? And then look at what are the gaps? What are the disadvantages of doing this kind of behavior? And then fill those gaps, right? So everything has an advantage and disadvantage, the duality of life.
Awesome. I've seen two kind of people in trading. There are people who are really unsure whether they can make it or not in trading. Like they want to have kind of confidence that they can do it, and they want to have other people reaffirming that they can do it in trading. And some people are the opposite, where they know they will make it. They are confident they will be able to get there one day. How does that reflect in personality, and does that impact how you trade, or not so much?
Yeah, absolutely. You're asking awesome questions, Etienne. I love it. So when we have a trader who deep down believes they can't do it. So let me give you an example. What I see a common thread is traders who, let's say, they miss a trade and then they're incredibly hurt about it. I'm sure you have come across those traders as well. They're so in pain about having missed this trade. And that pain is disproportionate to the event, because having missed a trade is not the end of the world. If you have left $200 on the table, I mean, how many times did you go out and spend $200 on something completely useful and you weren't upset about it? So we can see that's disproportionate. When someone is upset about micromanaging or not taking their losses, what that tells me is that deep down, they doubt that they can make it. Again, because of this disproportionate pain. Of course, when you miss a trade or if you leave money on the table, you get annoyed and it's like, oh man, I could have made so much more. But it's not that deep pain. That is one benchmark. Now, with that deep pain comes also a thought process. The thought process is usually directed to the past. What's wrong with me? I never make it. I did that, I again made the same mistake. And so they stay stuck in that mental stuckness loop. Now, traders who have the deep belief that they can make it, they also have that pain, but it's as I said before, it's more of an annoyance and like, I'm going to crack this no matter what. Like, what the heck, why can't I get this? I'm going to find a way. And so they're future focused, where they look at, how can I find a way? How can I make it? So when you have the trader who doesn't really believe on themselves, they feel like their back is against the wall of despair. Whereas the trader who feels they can make it, even though they don't perform as yet, they have their back against the wall of power. What does that mean? The wall of despair is the thought processes. It's all about you, how bad you are, what a loser you are, how the markets are so hard, and how you got profit hunted. The having your back against the wall of power is like, all right, so that's feedback for me. I always say your profit or loss is nothing but feedback. You're not getting paid for your time. You're getting paid for your skill. And if you have on the bottom line a red number, a loss, then you need to practice your skill. Might it be mindset skill? Might it be strategy skill? Might it be applying your strategy skill? You need to figure out what the gap is. And that's what they do. They look at, all right, so what did I do wrong? What did I need to learn? How can I improve? So what's going on here? And for example, I have a guy from Switzerland I'm working with at the moment, and he's running his own hedge fund, and I can see the difference. Right, he's always curious. He always emails me saying, "This is what I did. What could I have done better?" And so the other guys who are staying stuck, they email me, in the subject matter, frustrated. Again, I stuffed up. I left money on the table. Had this beautiful setup. I fucked up again, and they just complain. They are not solution focused, but they are, please help me out of my pain focused. And that's a really big difference. And that is an expression of their thinking patterns, which can be changed, right? That's the beauty about it.
Yeah, I really like that. This makes a lot of sense. Being focused on the solution versus the problem. If you complain about your situation or what you're facing, then you're not focusing on the problem, or you're focusing on the problem, not the solutions. That's a really good point. I appreciate that. So let's do some questions. We have a lot today, and that's good. We have a question here from from MD was asking about. I always prefer momentum trades, but I'm very stressed when I'm in a trade. Any advice on how to decrease stress while trading?
That's a really good question because, so first I would want to know what is stress for you? Like, how does this, because, stress is such a general word. It can show up in many ways. It can show up in having anxiety when you're in the trade. And I know a lot of traders that get like the heartbeats and get sweaty palms. It can show in not wanting to get into the trade, so avoidance strategy. Being stressed can show in so what we have fear, we have not wanting to feel the pain, so avoidance. What else can stress mean? Simply, stress can mean that you are not able to have access to your logical thinking. So I always say when you feel stress, generally speaking, it shows in two ways. Either it's the fear of getting what you don't want, so a loss, or you don't get what you do want, so a profit. You can see it's two very, very different contexts that we need to work on. So that's one thing I would really look at. What is triggering, or how does the stress show up in your life? Not just in trading, but also in your life. Because if you are stressed in your trading, it will also show in other situations where you're under pressure. So for example, if I have traders whose brain goes blank when they have to make a quick decision, like the paralysis that we sometimes experience, like the deer in the headlight. Let's say there was an announcement and then the euro jumps and you're like, oh my God, I need to get out, I need to get out, but you're unable to press that mouse button, the paralysis. You might also experience that in other areas. So sometimes, yeah, severe anxiety, exactly. So sometimes I like to put, very often, I'm actually a mean person, if you believe it or not. I put my traders under pressure and under stress. And I'm like, come on, you give me the answer. And so if their brain goes blank, I know they have something stressful is showing up for them and they can't access their logical thinking. They're now in survival thinking. And so what we need to do is we need to find out what is triggering that survival thinking and how can we resolve it and practice it so that even under stress, they have access to their, critical faculties and they can think logically. And this is what soldiers do, right? That's what the military does. They train and practice until the behavior is so deeply ingrained that they don't even need to think about it. So that's one avenue that I would recommend you to go down. So the other avenue, of course, in the context of the topic of today, is momentum trading really suitable for you? How do you usually make your decisions in life? Is that the same way how you have to make decisions in your momentum trading? Or maybe you're better suited for a different style of trading. And as you know, the beauty is the market is just fractals. You can trade the same style on a 1 minute like you could trade on a monthly. Just your stop losses are a little bigger. And that's the main difference. So that is something that I would look at for you as well. So if you have severe anxiety, then you need to go to work because whatever you experience in your trading, that anxiety, that stress, that is just a mirror image. That's just a reflection of something else that happened in your life. And that can't be trained and can't be healed through trading. I would recommend you to really look at what was that, what triggered that severe anxiety. And when you can heal your severe anxiety, your trading, like a domino effect, will fall into place. Yeah. So really, yeah, take it serious and be kind to yourself and work through it. There's so much help out there now. Yeah.
Yeah,
Thank you for sharing, by the way. It's awesome.
it's hard to know when you have stress or anxiety. Why is there? Is it because of your training style, not fitting your personality, or is it because of something you did wrong, like you take too big of a size? So, what would you say people have to do to figure out where it comes from and how to fix it?
Yeah. Very unpopular answer. I'm really sorry, Etienne. If you have fear in your trading style, if you have fear in the contract size, if you have fear about anything when you're in the market, so we call that performance anxiety, performance pressure. That's what MD is experiencing, a performance anxiety. It has nothing to do with the market. The market is really a reflection of your relationship with authority, your experience with authority, and conditioning and programming from your childhood. We don't go into childhood to go and ruminate in the old rubbish. Like, that's not the point. We only want to look at what was programmed and conditioned, and when we understand this, we can transform it like that. Really easy. We just need to understand the structure, the what triggered what and what happened, so that we can transform it. That's all we need to do. So I assume that severe anxiety was driven by a trauma that you experienced as a child. And when I say trauma, I don't mean something big like, abuse or so. It could be something like having been lost in the shopping center. And it could be something simple as that. So all it takes is to be real honest and say to yourself, all right, so that feeling that I experience in the market, where else do I experience it in my life? Or have I experienced in the past? Is there a little bit of a pattern of performance anxiety where your brain goes blank? And I had that, MD. I had that really, really badly. So it's just take it as feedback and work through it, and you'll be awesome. Yeah. Because what I've found with my traders who have the courage to face their fears and resolve them and heal them. So no matter how small your account size will, your contract size will be, the anxiety is still there. And I always say, I was happy to spend $200 or $300 on a pair of shoes that I would never wear because they were hurting, no matter how pretty they looked. But I couldn't lose $20 in the markets. So that's performance anxiety, and that's based on some sort of trauma. And when that is healed, then everything else will fall into place. It has nothing to do with trading. So as I said, the ones who have the courage to face whatever is triggered in the anxiety, they usually become even stronger traders. They have even more grit. They have even more mental toughness because they made it through. Yeah.
Interesting. Gemma says, "Can be watch this live, watch all of you with Mendy's." That's really cool to hear.
Thank you.
That makes sense. So I appreciate that. Now, we didn't really talk about much on the time frame. We talked about it a little bit, but how can you figure out what time frame is best for you to trade?
So, two ways. Number one, you practice trading on each time frame and you go with what you feel most comfortable in. Yeah. So if you trade on the 1 minute and you get anxiety, try trading on the hourly and see if that works better for you because you have less anxiety. So your emotions and your thoughts are feedback for you. And here's my preferred way of doing it. Trade on each time frame and then look at your statistics. Your statistics will tell you where you're doing best. And they don't lie. As you know, numbers don't lie. That's what I would do. Yeah.
Awesome. Yeah. So you gotta try both, definitely. How long can you? So how long should you try something before you know it works or doesn't work? Because like some people could try it a week and then give up after, or a few days and give up
Yeah.
after.
So I would really go back to my favorite live market replay, where you can go back, 2 years in the past, because you want to be trading through different markets, where you can go to, I don't know, 2007, 2008 and trade bear market, which we barely had since then, right? You can go to 2016 when, after Trump was elected, the market behavior changed again. So I would go to live market replay and trade certain segments of the market and would trade. That's the tricky bit with my live market replay because we don't get 1 minute data that far back. But yes, I would go as far back as possible and practice it, and you'll get an insight really, really quickly. So I wouldn't do it forward testing. I would do it really with backward testing. Do you have any ideas, Etienne, what live market replay data we could access to get more information?
Yeah, you can get tick data with if you go with the software I use, Soft for FX. So soft number 4 then FX, you can get tick data for a long time ago.
Oh, really? Oh, you're a
Yeah, yeah.
legend. You know, Etienne, I just want to say something as well. So I had a trader. She bought this software, and I forgot the name. I'm sure you know it, for 500 US dollars,
Mhm.
backtesting software, and it didn't work. So she emailed them. She asked for support. They didn't get back to her, and she said it was really crappy. And then she went to Soft F4 FX. It's what,
Mhm.
99 US dollars. Do you
Yeah,
have a
99
link?
US dollars. Yeah.
Do you have a link on your website where people can go to and
I have. I'll put in
um,
the chat. Yeah, I have one. Yeah.
awesome, awesome. And so she loves them. She said they're so supportive, and she actually doesn't need support because it works so well. So yeah, excellent. Yeah. So soft for Forex, that would give you all the data. And now you can go back to different um, time zones, different market environments, because just because you made, I mean, we see that with crypto, right? Just because you made money in a certain amount of time doesn't mean that you can trade that strategy, because if the market changes, are you still able to perform? I have a trader who said to me, he practiced a certain, I think it was Ichimoku, for 3 months, and he turned on the strategy tester. I think he made $300,000 in profits. And he said, "Why isn't it working now?" And I said, "The market is now different than it was at the time." Yeah, so that's why it's not working. You need to really test more than 3 months. Like, you need to test, I don't know, 30 years if possible. And then you know when is the time your strategy performs best, and then you use the strategy only during those times. So, for example, as I said before, reversal patterns in the index market didn't work because the market's just pushing up, pushing up, pushing up. The algos, and the it says here's some error message. Do I need to reload? Am I still
No,
online?
it should be fun.
Okay, good.
Yeah,
Okay,
yeah,
good.
it should be fun.
Excellent. So the reversal patterns didn't work in the last few years. So you need to learn to trade continuation patterns if you want to survive in this market. So that's why when the market changes, when we have a little bear market, or at least a retracement, can you still make money? Can you identify what that looks like? So that's why it's useful to go back to 2007, 2008, or 2000 to 2000, beginning of 2003, just before the last war. The market also came down. So yeah, that's what I would do.
Interesting. What about someone who, let's say, would be a really good day trader, but because of their job or the time they have available, they cannot day trade? How can they reshape their personality to be able to trade on a different time frame?
Yeah, I see that a lot, and it's really hard, isn't it, when you have to work? I've got a guy over in Europe. He works 10-hour days, 10, 12-hour days, and on a building site. So um, we are looking at the moment how we can adjust it for him. Um, that's where automated trading comes in a little. So something that you also explored, um, where he can get maybe his setups, setup alerts on his mobile phone, and maybe get a trading buddy who then executes his trades. Not quite sure as yet how we're going to do it for him. So it's very different if you work in your physical work on a building site, or landscaping a garden, or if you're in an office and you can just duck to the toilet and do what needs to be done, or you have access to a computer and you can monitor your trades during the time. I think the 4-hour time frame is really useful, where you then only measure every 4 hours. What would you say, Etienne? I think you're more experienced in this um,
Yeah,
than
it definitely
yeah.
for people who travel and trade, like you want to travel and have fun and trade at the same time. I think 4 hours is a good time frame because
Yeah.
you check it every 4 hours. It's easy to check it like throughout the day for some time. One
Yeah.
hour is one of the worst when you do that, or 30-minute chart as well. So you do have to go low, like 15-minute chart or higher than 4-hour chart. I think that's what works best
Yeah.
for me.
Yeah, I think so too. So it's a really tricky one. Hmm.
Yeah, interesting. But what are some things that you can do to improve? Let's say you would like to be a better day trader, or you would like to be a better systematic trader, are there some things you can do to improve, like increase your disc parameters, disc profile, in some ways? How do you change that?
So what, for example, if you are a high D, you might be someone who's very, I'm very generalizing here because we are not just one energy, we are a combination. So consider that all the four behavioral patterns are available to all of us. And what's happened that people, they studied how people make decisions and how they interact with the external world. And then based on those observations, they created those four broad categories. But we really have access to all of them. It just means that we have trained and practiced one more than the other. So that's where I would start, looking at what is your main way of interacting with the world. So if you're a high D, you might be too aggressive and might be prone to over trading or going on tilt, or you might be prone to putting on too big position sizes because you love a good fight. So what you then want to bring in, you want to bring in a little bit of high C, where you structure your trading in such a way where you, for example, laminate your strategy. You have to take off first before you get into a trade. So where you find ways to kind of slow you down, where you maybe have a trading buddy that is saying, "Hey, slow down, dude. That's you're now about to go on tilt, or you're about to self-sabotage." So what is really useful on one hand, so how we have traders, they're really good at business, but they can't make it in trading. It's for that reason. Because in business, you need to be aggressive, you need to go out, you need to do marketing, you need to go after clients. But in trading, that is actually the thing that works against you. So you need to sit back in trading. You need to let the trades come to you. You need to observe and study rather than being active. And so being a little bit more passive. So look at really using, I use the Demon Finder from Tom Dante with my traders to look at what is the recurring mistake that you make. And when we know what the recurring mistake is, then we can say, all right, so now that tells me that you have a gap in this kind of behavior, and this is what we need to practice and train. So, for example, someone who hesitates all the time, they don't have a really good decision making strategy that they follow to press that mouse button. I'm generalizing here again. Could also be fear and anxiety, right? So let's suppose it's not fear and anxiety, it's really that they need to fine tune their strategies. And I found that a lot, Etienne, with traders who don't take their losses quick enough. It's simply because their exit strategy is not tight enough. It's too loose. Let's say it's if price hits this moving average, then I exit. But if price has gone really far away from the moving average and has to come down all the way back down, all the way back down, they give back a lot of profits, and then the regret sets in. It's like, oh man, I was in such a nice profit. Let's say I was in $1,000 profit, and now I have to give back $500. Maybe it goes up a little. Then we start negotiating with ourselves, and that's why I say, just use a simple trend line and get out when it goes through the trend line, and get back in if you see a new entry. No harm done with this style. So
Interesting.
yeah.
If you were with us so far, I know we went through a lot of different topics for finding a trading style. I think with this, you're going to be able to find what you need to trade better for sure.
Yeah.
Are there any things maybe we didn't really cover yet, or you want to talk about that we didn't touch on yet?
I think Jana has a really good question here. Can you just pull that up?
Yeah.
I have problems with brokers and trading view. They look different. Yeah.
I'm not sure why that happens, but yeah, the brokers always look different on
Yeah.
if you go with different platforms, even different brokers on the same platform. I know, for example, on TradingView or and that they don't show the gaps; they show candlestick instead of gaps, and that can affect how the chart looks. And for example,
Yeah.
FXCM they show the gaps in the candlestick properly, so it's different. But yeah, there's different things. Do you know why, Mandy? Why they have different charts?
Yeah, because different, so several reasons. They have different data providers, data feed.
Mm-hmm.
They have different as you said, like, for example, here in Australia, if you go with a UK broker, then often we have 5.5 days on the chart because for us it goes into Saturday.
Yeah.
So it
Different
could be
closing
that
time. Yeah.
different closing time. I might ask Chris Weston from Pepperstone. He always knows these things. I
Yeah.
might shoot him a question on Twitter where we can then feed that in here. So what else could be? I think these are the two main reasons: the data provider, different data providers for different brokers, and the time zones. So, for example, the 4-hour candle closes at a different time in Australia than it would close in the UK or so. Now I can adjust my closing hours accordingly on some charts. On others, I can't. So it's maybe something that we should pick up for next time. I'll get some more
Yeah.
information about it. It's a really
I'm
important
curious about it.
question.
Yeah.
Yeah.
Because even the same pair, sometimes on TradingView and on MT4 with the same broker, they appear different. So I can have a setup on TradingView, but not on MT4, or
Yeah.
vice versa. So it's
Yeah.
it's really curious. But yeah, I'll be curious to learn more.
Mm.
Interesting.
Yeah, we definitely should explore this for our traders. Excellent question. Thank you.
Awesome. So I think we'll wrap it up, Mandy. We discussed a lot today. We went through a lot of different topics. And we have a
Yes.
question here. Let's just go to that first from Daniel. Daniel was asking, a channel for me is slipping stop. We'll be doing well, then increased risk, and something not recognizing. So I guess I'm not sure. Is it
Okay,
that you don't take your stops, or go ahead, Mandy?
So let's just read into it. So you're doing well, and then you increase your risk. And then when the risk is increased, we all have an emotional threshold on how much money we can lose. So let's say for one person, and that's not dependent on income, it's your money mindset. Let's say for one person it's $100, for another person it's $1,000, meaning that if the loss is more than $100, then they find it hard to take that loss. But up to $100, they find it easy to take that loss. So that's what we call an emotional threshold on how much loss you can take. So when you increase risk, that might increase or go beyond your emotional threshold, and then you find it hard to take that loss. So do a test, Daniel, with yourself. Up until what stage do you find it relatively easy to take a loss? And at what stage do you start negotiating with yourself? Oh, if it goes back to that level, then I'll take the loss. Or maybe it's reversing now. So when you start this arguing with yourself, that is usually actually an exit strategy for me. When I start negotiating with myself in my mind and I stop focusing on what the chart tells me, I need to get out because my emotional threshold is being triggered. So not a good place to make really good financial decisions.
Awesome.
Yeah.
Definitely. Thank you guys for watching. I appreciate your time. If you like this video with Mandy and I today, give it a like. I would really appreciate that. And we'll catch you back here in the next video pretty soon.
Thank you so much for awesome questions, guys, and for being here.
Ciao.